Gold. It shot up a lot this year, nearly 30%. But could we see gold below $3,000 an ounce again? A certain bank thinks so. Let's take a look. How's everybody doing today? Thompson Coin and Stamp here, and we're looking at an article on KITCO.com. CITI sees gold prices falling below $3,000 by the end of the year. According to KITCO News, gold's nearly 30% rally this year has attracted significant bullish attention as a growing number of analysts look toward a $4,000 an ounce. However, not all banks are bullish on gold. Get that little centered there better. It says in a report published this week, commodity analysts at Citigroup lowered their gold price forecast and warned investors that the precious metal could fall below $3,000 an ounce by the end of the year. What do you think? Let me know in the comments if you think we could get back down to $3,000 an ounce. That would be a good buying opportunity. It says, in the updated report, the bank revised its 0 to 3 month target to $3,300 an ounce from its previous estimate of $3,500 an ounce. At the same time, it lowered its 6 to 12 month gold price forecast to $2,800 per ounce from $3,000 per ounce. Spot gold last traded at $3,369.54 an ounce, roughly unchanged on the day. Citi's year-end target would represent a 16% decline from the current price. Analysts said they expect gold's safe haven allure to diminish heading into 2026 as economic conditions improve. We hope. The analyst says we see investment demand for gold abating in late 2025 and 26, as ultimately we see President Trump's popularity and U.S. growth kicking in, especially as the U.S. midterms come into focus. The analyst said in the note, while economic uncertainty remains elevated, there is growing optimism that the U.S. can avoid a recession and that inflationary pressures will be contained. It says a major factor behind Citi's bearish gold outlook is U.S. monetary policy, as they expect the Federal Reserve to eventually cut interest rates, which would support economic growth. Looking at different scenarios, the analysts said that in their bullish outlook, heightened geopolitical turmoil and trade-related economic uncertainty and weakness could push gold prices above $3,500 an ounce in the third quarter of this year. On the flip side, in the bearish scenario, a resolution to the global trade war and easing geopolitical tensions could push prices below $3,000 an ounce. However, Citi assigns only a 20% chance of either of these scenarios playing out. Citi analysts may be bearish on gold, however, they are not giving up on the precious metals sector, as they see significant potential in silver. It says the bank sees silver prices rising to $40 an ounce over the next 6 to 12 months, driven by tightening availability and robust demand. The analysts also noted in their bullish scenario, silver could potentially reach $46 per ounce by the third quarter of 2025, driven by a quick resolution to the global trade war. That's by Niels Christensen on KITCO.com. So let me know what y'all think. If you think silver and gold is going to continue their bull run, or are we going to get a little bearish there and see a dip back on gold? Maybe we'll get a little bit of a buying opportunity. If we could get back down below $3,000 an ounce, are you going to pick up any? Are you still stacking gold right now? Let me know in the comments. Until next time, Thompson Coin and Stamp is out.